Indian rupee is crashing.
The Indian rupee.
Rupee has plunged further.
India's currency, the rupee, is also under pressure.
Just a few months ago, 1 rupee equaled 84 rupees. Today, it's already 87 and soon it will touch 100.
Rupee continues its downward trajectory.
इस साल 2024 में भारतीय रुपया अमेरिकी डॉलर के मुकाबले लगभग 3% कमजोर हुआ है.
Back in 1947, when we got independence, 1 USD was equal to 3 rupees. By the year 2000, it had reached 45 rupees. In 2019, it crossed 70 rupees. And now in 2025, it's hovering around 87 rupees. In fact, the rupees has been losing its value continuously. But this isn't something new. It's been a hot topic in politics for years. Before 2014, the BJP used falling rupee as a tool in their election campaign.
रुपये की कीमत जिस तेजी से गिर रही है.
Now it's Congress party's turn.
This is a magnifying glass, and I have brought it because I have lost track of how deep and how steeply the rupee has fallen.
The exchange rate has become a key agenda in elections. But according to our finance minister, the rupee isn't weakening. The dollar is just getting stronger.
First of all, I would look at it as not rupee sliding. I will look at it as dollar strengthening.
And if you look at the data, she seems to be right. Take a look at this chart. Almost every currency has lost against the US dollar in 2024. But have you ever thought who decides that the dollar is going up while the rupee and pound are going down? How is this even measured? And why does it matter to you and me? In this video, we'll break down how currency values are decided and dive deep into the reasons why rupee is falling. This is Kunal and you are watching Breakdown by TVH. First, let's start with the basics. The value of a currency works just like any other product or service. It's all about demand and supply. If lots of people want to invest in India, they need rupees to do that. When more people want rupees, its value goes up. But if investors start selling rupees to buy other currencies, the rupee's value drops. Let's say few NRIs are saving up money in the US to buy plots of land in India. These NRIs have to pay the landowners who they are purchasing their land from in rupees. Because what will the landowners do in India with dollars, right? This increases the value of the rupee. But suddenly, they see that the land prices in South Africa are going up and it looks like a better investment. So they decide to invest there. Now, all of a sudden, there is no demand for the land in India and these NRIs are selling all their land in India to invest in South Africa. This decreases the demand for the rupee and hence its value drops. Well, this is an oversimplification, but you get the idea. When India's economy grows faster than America, investors want to put their money here. So the demand for rupees goes up and its value strengthens against the dollar. Interest rates are another big factor. If India offers 6% interest on investments while America offers only 3%, investors will move their money to India for higher returns. This increases demand for rupees, making its value stronger. Now, why do we have to compare everything to the US dollar? This goes back to the history after World War II. While everybody was busy at war against each other, the US didn't participate in it until the very end. Instead, they became the world's factory. The US became the largest supplier of food, weapons, and clothes. Since every country was transacting with the US in dollars, with gold as a promise, and the world needed a primary currency for international trade, so the Bretton Woods Agreement made the US dollar as world's primary reserve currency, backed by gold. Even though the gold standard ended in 1971, the dollar stayed dominant because America had the strongest economy. For example, if company here in Gujarat buys oil from Saudi Arabia, they don't need to figure out the direct rupee to dirham exchange rate. Instead, the Gujarat company pays the Saudi in dollar directly to purchase that oil. The dollar works as the middleman in global trade. Now, before we get to the most important question, why is the rupee falling? Managing business finance can be a headache. Manual data entry, missed tax deadlines, cash flow issues, and wasted hours fixing mistakes. As a business owner, you know how important it is to keep everything in order. That's where Odoo accounting comes in. Odoo gives you a complete accounting system that makes managing finances easy, efficient, and error-free. Its bank synchronization feature automatically imports transactions, keeping your financial data accurate and up to date. The AI-powered invoice recognition reads invoices and autofills details, saving you time on manual work. Handling international transactions? No problem. Odoo supports multi-currency transactions and automatically updates exchange rates. Generating reports is just as simple. You can create balance sheets, profit and loss statements, and cash flow reports in just a few clicks, giving you a clear view of your business finances. Tax compliance is stress-free too. Odoo supports regulations in over 70 countries, ensuring you stay compliant without extra hassle. And the best part, your first Odoo app is free for life, with unlimited hosting and support. If you want to simplify accounting, save time, and stay on top of your finances, click the link in the description and try Odoo today. Now back to the video. Now let's get to the most important question. Why is the rupee falling? A country's exchange rate can work in two ways. First, it can be pegged, which means the exchange rate is fixed. For example, if $1 equals to 75 rupees, the central bank, that is RBI in our case, makes sure it stays the same. They do this by buying or selling dollars to control the rate. Before 1991, India used a peg system. But after 1991, we switched to a free float system, where the market decides the exchange rate. There are many reasons why a currency's value falls, and one of the biggest reasons is trade deficit. India has been in a trade deficit for a long time, which means we import more than we export. We import oil and many other things that we use daily. We do export IT services thanks to Infosys and Wipro, but these exports aren't enough to cancel our imports. And with the AI boom, it seems to be going down every year. Mostly, India is a net importer. Because of this, we have a trade deficit. This creates a problem because Indian businesses need more dollars to pay for imports than they earn from exports. This imbalance puts pressure on the rupee, causing its value to drop. For example, in November 2024, India's trade deficit hit a record high of $37.8 billion. This happened because imports surged by 27%. A higher trade deficit means more dollars are flowing out of the country than coming in, which weakens the rupee. On the other hand, a lower deficit or a surplus can strengthen the rupee. The record trade deficit in November happened because we were importing way more than we were exporting. This puts a lot of pressure on the rupee's value. When this happens, imports become more expensive, which makes the deficit even worse. It's like a cycle that's really hard to break. This cycle makes the rupee less attractive to international investors and traders, which weakens it even more in the global market. On top of that, our government reduced the customs duty on gold from 15 to 6%. Because of this, gold imports in India have quadrupled. This increased demand for dollars to buy gold and weaken the rupee even further. Another big reason why the Indian rupee is falling is foreign institutional investment, or FII. There are two main types of foreign investments, FDI and FII. Both of them play a huge role in shaping a country's economy. FDI happens when a foreign investor or a company buys a huge long-term stake in a business in another country. This usually involves setting up operations or buying physical assets like factories, machineries, or infrastructure. And FIIs are investment funds or entities from foreign countries that invest in another country's financial market. Instead of owning physical assets, they invest in financial assets like stocks and bonds. Over the last 10 years, India has attracted a total of $710 billion in FDI. But recently, we have seen a lot of FIIs pulling their money out of India. In October 2024, foreign investors withdrew over 94,000 crore from Indian stock markets, the biggest monthly outflow since pandemic. And this didn't stop. In January 2025, they withdrew another 78,000 crores. This trend continued in February 2025 as well. By mid-Feb, they had withdrawn 27,000 crores more. In total, FIIs have sold over 1.1 lakh crore worth of Indian equities. All this selling has put a lot of pressure on the rupee, causing its value to drop. But why are FIIs pulling money out of India? The answer is simple. They're getting better returns in some other place. Right now, everyone's rushing to invest in the US. In fact, my friend Varun recently pulled all his money out of the Indian stock market and started investing in US markets instead. Although the Indian stock market is performing better than the US stock market in terms of returns, the dollar appreciation wipes all that additional returns. From 2020 to 2023, inflation in the US was very high. When inflation rises, prices go up and the people tend to spend less money. This hurts the economy. To control inflation, the US central bank, that is Federal Reserve, raised interest rates. When interest rates go up, people take fewer loans, which slows down the economy. As the economy starts to slow, prices start to drop. This is how the Federal Reserve brought inflation under control. But when US interest rates went up, international investors thought, why invest in other countries when we can get better returns in the US? So they started moving their money to the US. This increased the demand for dollars, making currencies like the rupee weaker. At the same time, the US economy improved. Companies began investing more in the US to manufacture and sell goods. In 2024, the US received the highest foreign direct investment in the world. With higher interest rates and a stronger economy, many foreign investors decided to pull their money out of India and invest in the US instead. This made the dollar even stronger compared to currencies like rupee. And when Donald Trump was elected, he introduced a new tariff policy that made foreign imports more expensive. This increased the demand for the dollar even further, pushing its value up. In short, foreign investors saw an opportunity in the US and took it, leaving currencies like the rupee weaker in comparison. A falling rupee is adding more worries about India's economic future. The overall growth numbers and GDP look strong, but there are signs of trouble, like slowing rural demand and declining real incomes. China is reducing its dollar reserves, and global tensions are shaking up the world economy. For India, these external challenges are making things worse. The RBI has limited options to tackle this because of inflation and stronger dollar. This makes it harder to tackle these problems. Expert economists suggest that India should rethink its exchange rate policy and let the rupee depreciate even more. That could ease pressure on the economy and attract capital inflows like NRI deposits, which have helped the Indian economy before. But this approach needs to be handled carefully to avoid risks like inflation and ensure financial stability. The new RBI governor Sanjay Malhotra has a big challenge ahead. He needs to balance the risk of more flexible exchange rate with the need to fix deeper structural issues in the economy. If you like this video and learned something, hit the like button and smash that subscribe button for more such content. See you in the next one. Bye bye.